Hello, my amazing bees community. I'm Stephen and I'm a popular investor on eToro. Don't forget to like this video and subscribe to my channel. That will be awesome. So today, as usual, guys, I'm going to give you an update on some of the key things that happened in the market last week. And I'm also going to be telling you how our portfolio did in terms of performance. And I'm going to be talking about some key parts of my strategy that I intend to implement within the next couple of months. So what happened with our portfolio last week? Well, overall, if we look at what happened in the stock market was up about 2.8% for the Nasdaq. It had a really great week after a really tough September, and the beginning to October, it really rallied last week. And then we had the S&P 500, which was up about 1.8%. I'm really pleased to tell you our portfolio did extremely well last week, not only in the stock market and the stocks that we picked, but also in the crypto market. So our portfolio was up about 5.5% last week, which well outperformed the overall indices. So I'm really happy with the way that our portfolio is faring. A lot of the things that I've been saying over the last couple of months are starting to come to fruition, and I'm expecting a pretty explosive Q4 ahead of us. So just to sum things up, in October so far, we are up just over 9%. And that brings our total year-to-date performance on eToro at 136%. But I am not going to be resting on my laurels. No, I'm going to try my best to increase that profit as much as I can for all of you amazing copiers. But I'm also going to be making really strong steps in order to make sure that I protect your capital, because that's very important, because I know that it is your hard-earned money. And I have a responsibility to not only grow that money, but also to protect it. So I will be staying bullish, but I will also be very careful with how I deploy your capital. Looking at my stats, I believe over 80% of my copiers are currently in profit, which is really good. But we also need to bear in mind that that other 20% are the people that invested in just the first week of May. So it's a very small time frame where I am not in overall profit for my copiers. And that's why I always recommend a dollar cost averaging approach. And the reason why I suggest that dollar cost averaging approach is because it diminishes the effect of the buy-in price, and it really effectively spreads that over time. So it can be really important because it can help you to lower your average cost in a lot of different circumstances. So yeah, please consider adding funds on a regular basis. I am not going to add funds because I don't like to force my copiers to add funds at certain times, and I do not want to desynchronize you, because copier friendliness and to make sure that your portfolios are much in sync as mine is extremely important to me. Now it's time for our usual global update of what has happened in the market last week. So I'm going to start off in the US, and it was an extremely good week last week for US stocks, both in the S&P 500 and the Nasdaq, as well as some of the smaller cap stocks as well. And I think a lot of the reason was that previously last week, and then also throughout September, there were a lot of concerns. There was some concerns about the debt ceiling, which was extended, I think, 2 weeks ago till the end of December at the minimum. So that took a lot of weight and increased positive sentiment. There's also been some talk amongst investors as well that inflation could be starting to peak. Doesn't mean it necessarily is going to slow down very fast, but some of the key data, which I'll go into in a moment, shows that inflation is about at consensus at the moment. There was also some positive signs in terms of earnings, and as usual, the banks usually release their earnings first, and there was a lot of positive sentiments in the market around this earnings season, which I think has started to drive those stock prices higher. Oil prices have continued to surge, and last week was no different. Oil has gone to multi-year highs, and it continued to increase last week. And the reason why was that there was a lot of talk, because also natural gas prices have gone through the roof as well. And there was a lot of talk that utility companies were going to start to move over to oil again because it was more economically made sense. So that also put some upward pressure again on the oil prices. This has been really good for some of our oil stocks in our portfolio, such as Chevron and Canadian Natural Resources. And I'm very bullish on where I think that the oil price will go over the next couple of months. I don't expect it to slow down. Actually, I expect it to increase quite dramatically over the next 6 months. And I do think that there's a big chance that oil goes over $100 per barrel. And I've been slowly increasing our oil exposure in our portfolio, but I'm not going to do anything too rash, and I will do it very slowly in order to give us a good margin of safety. There has also been a lot of concerns about supply chain disruptions, especially as we come up to that holiday Christmas period. And usually, yes, we do see some type of Santa rally towards the end of the year, but there is some actual real fears out there, especially with retail companies, that they may not have enough stock in order to be able to satisfy demands because of these supply chain bottlenecks that we've been experiencing since the pandemic, but especially over the last couple of months. So it's something to keep an eye on. I don't expect it to be severe, but I think there could be some shortages of some key things. And also companies such as Apple also reported this week that they are expecting the supply of the new iPhones to reduce somewhat, and that is to do with the shortage in semiconductor chips. So that is a sign again that there could be some shortages in some key products. So there was some inflation figures released on Thursday, and one of those key headline inflation figures was the core inflation rate, which was reported at about 4%. That is still fairly high, but actually it was in line with consensus, so it did not exceed that. So that did produce some positive sentiment overall in the market. There was also some data released around the producer price inflation index, and that had actually gone up 0.5% for last month, which was in line with expectations, and also it was slightly down from the previous increase in August, which was about 0.7%. So again, those why a lot of analysts are starting to think that inflation could have started to peak. I'm not totally convinced. I think inflation could run on a little bit longer than expected, but those are some positive inflation figures. So over to Europe, and European indexes did very well across the board in most major European nations and also the UK. However, industrial production has reduced overall in the Eurozone, and there was some data released that output had reduced by about 1.7%. And again, a lot of that is to do with the supply chain bottlenecks that have been displaying themselves all over the world, but especially Europe, because in Europe, that is where they've had the most amount of energy shortages, and this has put a real burden overall on manufacturing and industrial output. There was also data released last week which said that the UK had increased its GDP by 0.4% on a month-on-month basis, which was attributed mainly to the opening up of the hospitality industry and services because of the reduced restrictions on COVID-19 and the opening up again of the economy. However, it is said that it could have been even better. But there was also some shortages a few months ago in the number of staff that were available to work in the UK, because a lot of people had been affected by being in close contact with somebody that may have had COVID-19. So I'm expecting those GDP numbers to increase somewhat in the next couple of months. UK employers have continued to add jobs over the last few months, and last month they actually increased those jobs by about 207,000 new employees in the workforce, and this has really reduced the unemployment rate, and it currently stands at about 4.5%. And at the pandemic peak in 2020, it was at about 5.4%. So we are continually seeing those unemployment rates going down, and we are now at a pandemic low of the unemployment rate, which is really good overall. However, Germany has slashed their economic growth forecast, and they are now forecasting an economic growth of about 2.4%. And previously that was at about 3.7%. And this again is to do with those supply chain bottlenecks. However, they are saying that those numbers will get better, and they do expect those to go higher over time once they move through some of these issues. So over to China now, and the stock market in China last week finished relatively flat, and there is a lot of anticipation around the release of GDP figures next week, and this was actually preempted by a statement by the Premier, which is 𝘃𝗶𝗱𝗲𝗃. And what he has said is that the economic growth in China has started to slow. So we could be expecting some lower GDP figures than forecasted, but we will wait and see. China, like all countries around the world, are actually suffering an energy crisis, but it is particularly prominent in China at the moment because China is a very large manufacturer. They also have very cold winters as well, so they're expecting that the demand for energy is going to increase over that winter period, and they've been really working the hardest in order to make sure that they get those energy supplies that they need. So they've actually been talking and starting to make agreements with US LNG producers in order to be able to secure more amounts of LNG in order to be able to continue the manufacturing and also be able to provide that energy that is needed for the general population in China. There was also some inflation data released from China last week, which showed that the producer price index had actually increased by 10.7%, and this is often known as the factory gate inflation, and a lot of economists use this to try to forecast what they think real inflation will be on normal consumers in the future, because often it's the very first thing to spike, and there is often a lag before those prices get to the overall consumer. So this is slightly different to what I was saying about the positive sentiment that we could have peaked. And this data is showing to the contrary, that this is continually going up. And actually, this is the highest PPI reading in China since 1996. Spokesman for the Chinese government as well also tried to relieve some of those fears around the Evergrande situation and overall the construction and developer industry in China. And what he said is that although Evergrande does have a large debt, it is not very large in regard to the overall Chinese economy, and that the banking system was able to absorb some of this pressure. So he really tried to kind of relieve some of those fears. However, there has continually been defaults on bonds by Evergrande, and there's also been some defaults on not being able to pay their bonds for other companies such as 𝗃𝗃𝗃𝗀𝗃 Holdings, which I told you a little bit about last week. So it's a situation to keep their eye on, but I do think that the government are trying to support this situation as much as possible, and I don't believe that this is going to cause a big contagion either in China or overall in the overall economy around the world. As we move on to our top 3 performing stocks of last week, and our top performing stock of last week was a company called 𝗳𝗏𝗯, which grew about 13.7% in our portfolio. And this hasn't been doing so great over the last 6 months or so, and a lot of that was to do with the very strict COVID restrictions that were in China. However, this has seemingly started to subside over the last kind of month or so, and we are starting to see more and more people frequenting the restaurants, and I'm expecting this to have a nice bounce back and recovery in the next couple of months. But it was very good to see early signs of that last week. The second best performing stock in our portfolio last week was Coinbase, which rose over 13%. And this was not particularly surprising considering all of the positive sentiment at the moment in crypto as a whole, especially around those potential Bitcoin ETF approvals. And actually it did increase very much in line with the overall Bitcoin price. So I think it's very good to have overall in our portfolio, and I think they are going to be a big beneficiary if there is a surge in the crypto prices, which I am expecting both on Bitcoin itself and also the altcoins, as they make fees when there is a lot higher volume overall in the market. So I'm very much looking forward to the next quarterly earnings. The third best performing stock in our portfolio is Bluebird Therapeutics, and that increased last week at about 9.4%. So as I move on now to the crypto market, and if you have skipped specifically to this chapter, then shame on you. But I totally understand the reasons why everybody at the moment is very excited by what is happening in the crypto market. And at the time of making this video, Bitcoin has soared through that 60,000 psychological mark and is now just under 62,000 and is getting very close to the all-time highs of $64,000. And I'm going to try and break it down for you why the sentiment in crypto is so positive at the moment. And the first part of that is around the Bitcoin ETF approvals, which are coming up within the next month or two. And I've explained in my previously videos about the difference between what a futures-based ETF product is, and also around a physical or spot-based Bitcoin ETF. And there is a lot of differences. So last week, there's a lot of rumors in the market that 2 of those Bitcoin futures ETF are due for approval very soon. And there was also a lot of leaked documents in this regard from the SEC. And there has been a lot of talk that they could be listed as soon as next week or the week after. Obviously, this is extremely positive overall for crypto, and we will see a lot of large injections of capital from people in the traditional market and institutional investors into Bitcoin. But it is important to differentiate. This is a futures ETF, and a futures ETF can be manipulated. And what does tend to happen with these future-based ETFs is when we are in big bull markets or the sentiment is very high in the market, these can trade at a premium. And when the markets are negative and it's in a bear market, these can trade lower than the overall spot price. So there is a lot of manipulation in terms of the overall futures price in the ETF. So it's something that you need to watch out for, because a lot of institutional investors will use these as an arbitrage opportunity. However, there are a couple of other physical spot ETFs which are due for approval in the next couple of weeks. They are less likely to be approved, but I'm really hoping that at least one of those gets approved by the SEC, because this would be really good, because it would not only drive more money into the overall crypto market, but it would also ensure, because these Bitcoin ETFs, which are physically or spot based, they have to have that certain amount of Bitcoin in their reserves overall. So this should really increase demand overall for Bitcoin ownership. It was also announced by Jack Dorsey, who is the CEO of Square and also of Twitter, and a huge Bitcoin advocate, that Square are going to start to look at and explore the possibility of starting a Bitcoin open network mining system, which I think will be overall very good for the space. So I wanted to spend a little bit of time now talking about Binance Chain. And it was actually released last week by the CEO of Binance, and his name is 𝘁cie, that they are planning to invest over $1 billion. That's right, that's a huge number. $1 billion overall in the Binance smart chain ecosystem. And that's really going to help incubate new projects to actually work on the Binance smart chain, which I think is underestimated news, because I didn't hear a lot about it last week, and that actually forced me to actually write an article to try to explain to you as my copiers what this means overall for Binance. So I think it's a very bullish sign. It really shows that they're starting to try to attract as many developers as possible to the Binance smart chain, and they're getting a lot of that intellectual capital, which is actually transferring over from other smart blockchains such as Ethereum, etc., for example. So there's going to be a lot of new projects on the Binance smart chain overall, and I'm actually really bullish right now on BNB. And the reason why I am really bullish on BNB is, one, because of the future developments, as I just mentioned, on the Binance smart chain, in which we use BNB in the overall ecosystem. Another reason is that Binance constantly do burning events, and what that means is that the total number of BNB coins that will be in supply actually decrease, because they reduce those number through a mechanism which they call burning, which I believe the next one is due in the next week or two, which I think is going to be very bullish overall for the price. But another underestimated area, which I think people aren't thinking about at the moment in terms of BNB, is that if we do have this really explosive Q4, which I'm expecting, which I think will start off with Bitcoin and then price surge above all-time highs, but then at a later stage we are going to see an altcoin big rise, I think, in the markets, and that is going to be really bullish for BNB. Why is that going to be really bullish for BNB? Well, it is an exchange after all, and they make a lot of money from fees on people buying altcoins in general. And I think especially these exchange coins are going to do really well, because people are going to be buying those altcoins on their exchange. But another important thing is there is a lot of incentives to use their native coin in order to pay fees. So you can see a lot of people, and especially traders, actually stocking up on coins such as BNB in order to be able to get those reduced trading fees. So I'd keep an eye out for BNB because it doesn't get a lot of press attention, but I think it could be a very good performing altcoin in our portfolio for the rest of this year. Lastly, I wanted to explain more about my overall strategy, and I've been talking to you as copiers for since I started as a popular investor, that my overall strategy is to reduce the amount of crypto weighting in my portfolio as the cycle progresses, because in my opinion, as the cycle progresses, it becomes more and more risky, not less. As the price goes up, it becomes more risky. So I reduce the amount of the weighting in my portfolio over time. So as prices are going up, I'm continually trimming my overall positions and taking profits, because it is very important to take profits. Well, a lot of people said to me, well, you are expecting, and you have said that you do expect Bitcoin to go over 100K before the end of the year. And the answer is yes, I do expect Bitcoin to go over 100K before the end of the year. So people say, well, why don't you just keep everything and then try to time the absolute top? And the reason why I don't do that is because, as I said at the beginning of this video, my objective is not only to grow your overall capital, but it is also to protect it. So if I continually reduce that weighting over time, you have the benefits and the advantage of being able to ride those profits up as the crypto prices increase, but we also have the margin of safety if there's any big dips, and it also helps us to reduce our drawdowns. So it's very important to take profits along the way. There is a big thing in crypto that you hodl on forever and you hold into the moon, and it is important to squeeze those winners, I have to admit, but take some risk off the table as well. And I think that's what I'm doing overall in this portfolio. And I think it will, in the test of time, I think it will show that it's really important. And I've used some of those money that I've used for trimming my crypto positions to put into some of my other stock positions. And I added some more stock positions into our portfolio last week as well. So this does really provide us more diversification in our portfolio. I will keep you constantly updated, but you know, just do not be surprised when I am reducing those positions. And I do know that they could go up much further, but I also want to protect your money for the long term because it is very important to me. Thanks very much for listening to this video today, guys. It's always a pleasure talking to you directly. I really love to do these videos because in what other circumstances can you have a regular weekly update from your investor? Definitely not in the traditional hedge fund world. So thanks very much for listening to my video today. I thank you for all your support and patience, and it's really great to talk with you. And as usual, if you have any questions, don't hesitate to let me know, because I want to be as approachable investor as I possibly can. Have a great week ahead.